Hi, welcome to the Market Alert for Thursday, the 27th of March 2025. So inflation falls faster than expected in boost to Chancellor. Utter nonsense, because if we have a look at the numbers for yesterday with regards to this, you will see that the numbers dropped by 0.2%. I mean, absolute joke, but that's the media for you, isn't it? So that was good news for the Chancellor. The rest of the day, a disaster. We're not going to go into that. Talking of disasters, President Trump unleashes 25% tariffs on foreign-made auto imports. We are going to charge countries for doing business in our country. Yeah, I mean, that's at the moment. He might change his mind by the end of today, but that's yesterday. US stocks declined on tariff concerns and tech weakness, and more of that. Dollar bid on tariff developments, which we expect. So that was an interesting one, that the dollar was bid. And then AI bubble fears wreck tech as tariff talks lift the dollar. I start to see the beginning of some kind of bubble too, right? It's a massive bubble in the stock market, and it's just a matter of time before somebody actually puts a pin in it, and maybe Trump is the man to do that. Right, let's have a look at economic news for today. We've got Trump speaking at 1 a.m, which he's already done, and that was obviously about the tariffs, which we've seen. We've got final GDP quarter on quarter, but the OBE have forecast a bit of a disaster for the Chancellor in the UK. Oh, that's actually the US one, not the UK. But that's a disaster as well. And unemployment claims as weekly ones, and then we've got final GDP for the US, and then pending home sales. Yeah, it's not good news for Rachel from accounts at the moment after yesterday, but she continues. Right, so let's have a look at the market's reaction to all of this news from yesterday and kick off with the Dow. So the Dow down yesterday, and some selling to accompany it as well. We're already overbought, the market showing there the crossover in stochastics as well. However, overnight prices managing to stay above the 5-bar moving average there. In a bit more detail, the derivatives market rallying the market up until you can see we've got the market declining, but overnight recovering quite nicely there. The DP, we're a bit away from yesterday's high, but that's where the market looks like it's intending to travel at the moment. So prices moving there to the upside at the time of recording. In the German DAX, not a good day at the office yesterday. The market down, and we're still in the sort of oversold situation there. A lot of selling around for yesterday, but we're in a bit of a sideways move now, aren't we, with the German DAX, a bit of a consolidation phase going on at the moment. 30-minute chart I'll look at in just a second, because I've just been distracted. Let's have a look at where we are on a retracement basis. So we're still at 62%. From there to there and projected down, and the market's finding a bit of support there overnight as well. Needs to get back above this number. In the 30-minute chart, let's just have a look at that. If I can find a 30-minute chart, there we go. So yeah, we started off moving to the upside, and then we collapsed, and then we had a sideways move, and then we collapsed again yesterday afternoon. So a straight reversal on what day was it? Tuesdays, we saw the market rally up 350, and yesterday sell off for a lot more. So there's a lot of weakness around in this market at the moment. Overnight, the market trying to come off the low and the close at the moment. So it's been sideways all night, trading in a 50-point range, which is unheard of. Certainly a lot more volatility around in this market than there ever was a few months ago, that's for sure. And in the S&P, the market not too dissimilar from the Dow. Not any selling around though, but we are certainly overbought. And the market also at 62% on the upside, or between this and the 50% retracement. Again, we moved up in the derivatives market. The cash market opened and we sell off. And then we've moved back up following the Trump tariffs at the moment. Just need to get through the 200 MA in the 30-minute chart, and also the 50 EMA. Meanwhile, for Rachel at accounts, got away lightly yesterday once more. Market shows an inside bar with demand. So we could see the FT have a bit of a bounce here. Not a great deal though, for sure, because we're also like the DAX, we're in a bit of a sideways trading range now at the moment. 30-minute charts, obviously very choppy yesterday because of Rachel, and then the market down, gap down, has come back and filled the gap. So the key here, really, when we look at the sort of inside of what's going on in the daily chart, we need to see the market hold above the new low that's been made overnight thanks to Trump's announcement of 25% tariffs on all cars being imported into the US. Obviously, this was a boost for the US dollar yesterday. You can see that, but overnight the market has now reversed this, which is going to be helpful for the metals. So let's have a look at those. And starting off with silver, a bit of a boring day yesterday, stuck at 78% retracement at the moment. These have got to be taken out and up to that 34.26 in order to move higher. Will it do it? Well, it's struggling at the moment, but it is oversold, as we can see down here. So it's got a bit of a chance of moving higher. And then, of course, the gold-silver ratio may help. Look at that in just a moment. 30-minute charts. We've got the 130 slam, guaranteed, isn't it? 4 days out of 5. And then the market moving back up overnight. It's just resting at the moment because gold is resting there as well. So it's just sideways at the moment. It needs to take out the all-time high of 3057. Yesterday, just very quiet, and a bit of a slam there overnight already, coming back below yesterday's high. They just hammered that down, haven't they? Yesterday up, back down. You can see there's an 89% retracement sideways, and then the tariff situation there moving prices back to the upside. So look at the gold-silver ratio. So Tuesday, obviously the market down. Wednesday, silver holding ground but starting to move back up in the gold-silver ratio. I wouldn't be surprised if we don't go back up to the 92. It's Thursday today, Friday slam tomorrow. So we need to see that move and break this downside. But at the moment it's being held. What a surprise. Right, let's have a look at yesterday's trades. So in the pre-market session, the market piled on over 100 points. That is just incredible, really. They used the UK inflation numbers to drive prices higher. And then that didn't last long, did it? As the market then sold off, as you can see there, all the way down to the S1. And then we had the signal there as the market failed in its rally. And then back down again. And prices then, after 10 a.m, managing to move back to the upside as the futures in the US were bought into to bring the markets up before the cash market open. We then get into the afternoon, the weakness returns, and of course we then get the US selling off at the open, and we had another potential sell here, and that was taken out, and the buy side moving to the upside there, which you can see up nicely, and then into the evening the market moving back to the downside with the Dow, and then trading down to the low of Wednesday there at around 5 p.m, and then continuing lower with the Dow until the market is brought back later on in the early part of the evening there, 6 p.m. Right, quick look at what we're doing overnight. And at the moment, we've got a bit of sideways going on. We've already had a look at yesterday's low. You can see the green bars there trying to bring the market off this. We're struggling a bit at the close at the moment. We're a long way off yesterday's high as we're trading down at the low. And we know the market dropped a good 300-400 points. So a long way off the high, but never discount it, because on Tuesday the market managed to come off the lows and trade all the way up to the high. Depends how it interprets Trump's tariffs now, whether it's a good thing or a bad thing. On the face of it, it's a bad thing, but you know, the markets just say, okay, fine, let's look like we care, and then the algorithms kick off and the AI and all the rest of it now in the high frequency trading. And before you know it, we're back trading at the highs, keeping the illusion alive that even in these incredibly overvalued markets, that all is well. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.